Okay, so CA Murtuza Kachola, Secretary WRC, here. Let me welcome all the participants to this session on the direct tax by Virat. Virat has joined us from Vadodara. Welcome, Virat, and thank you for accepting our invitation. It is really a good initiative whereby during this time when people are at home, they are getting an opportunity to get themselves technically updated on various subjects. And in fact, today, just an hour back at 2 o'clock, when we had this session on bank audit, and it was to do with the Excel tools, we had 1,000 participants. So the facility which WRC is using, maximum 1,000 people can be accommodated. We had 2,000 registration and 1,000 people could attend. So that is the type of response. And every day we are having, every session has had 600 people. There's no less than 600. So I welcome all the participants, thank them for taking this opportunity to learn. Let me now request the coordinator, CA Ashish Bakliwal, to introduce the speaker. Ashish, over to you.
Yeah. Hello. Yeah. Good afternoon, sir.
Good afternoon.
Good afternoon, everyone. Thank you, Murtuza sir, for giving me this opportunity. It's my privilege to introduce today's speaker, CA Virat Atul Bhav sir. He is associate member of ICI since 2005. He done BCom and DISA. His core practice area is tax advisory and representation. He presently associated with KC Mehta and Company Vadodara, which is leading firm in Vadodara. He is handling the area of tax representation and tax advisory. Before this, he worked with GK Choksi and Company for more than 10 years. He was handling income tax search, seizure, assignment, and litigation, including settlement commission. He presented on various issues of income tax at various professional forums like branches, WRC branches, study circles, etc. With this brief introduction, I request Virat Bhai to present this case. Before you start, Virat Bhai, I must thank the WRC team for taking this great effort at this critical time and motivating all members to best utilization of this lockdown period. I kudos to all those people. Now, Virat ji, to you. Thank you.
Thank you. At the outset, I think I must compliment the whole team who are working day and night, because I think it is one of its kind. And let me assure this is also for me a first time experience whereby I am delivering a webinar whereby possibly I'm interacting with more than an anticipated number, as the chairman sir has rightly pointed out. So now, without taking much time, and the topic for today's discussion is about the direct tax measure under the COVID-19 outbreaks. Now, the backdrop. As we all know, what is the current situation in India, and in particular the COVID-19, which has caused a massive disruption across the globe, and India is not an exception. It has caused disruption in every aspect, say it's a business, economy, or more importantly, the human life. With the number of cases which are increasing in India as of now, I think we have hard days to come, but I'm very much sure and hopeful that the people of India will definitely take absolutely care and follow the protocols which are laid down by the government. In this unprecedented lockdown, as we all know, all the institutions of the government has already started taking various measures, say RBI, MCA, SEBI. And view of this, the Honorable Finance Minister on 24th March came out with a press note to give respect to the taxpayer in India and relax several regulatory and compliance guidelines. So give full force to that press note. On 31st March, they came out with an ordinance. And that ordinance laid down several relaxation in terms of various acts, which they predominantly called as specified acts. And my today's endeavor shall be on income tax only. But let me tell you that the other provisions of the other act, which are part of the specified acts, the same principle shall apply. So though I am not touching upon the other specified act, but the principle which we'll discuss will surely apply to those aspects. One more important principle which I want to lay down. When you see this ordinance, it is hardly 2 or 3 pages. So I believe that lots of clarification is required. And in my personal capacity, I would say that it is not an advisable step to take any aggressive call on an interpretation of a particular provision of this ordinance because of the two reasons. The first reason is the circumstances under which this ordinance has been passed. It has been passed under the so much difficulty within a short span of time. And secondly, the intent of and the objective of the legislator. So I believe that when you go inside these two principles, and then you will get the answer. And I have envisaged so many aspects under the Income Tax Act which can be covered by this ordinance. Or if one take a different view, or a view which is, I'm not saying not possible, but a very reasonable or a rational view, still you can take an argument which we will discuss later on. I see that the whole ordinance will eventually boil down to a notifications. When you read section 3.1, you will find that the government has also envisaged the circumstances or the possibilities which could be covered under this ordinance, but because of the shortest time available, they have not presently identified, and therefore they have expanded the scope by putting a clause whereby they have said that the other provision will also apply subject to some condition, and that will be notified. So this is a key area where lots of people can have lots of questions that whether a particular claim is included or not. So that we will discuss eventually when I go to the last part of my presentation. Now, a snapshot summary of the ordinance, as it is said that it has been passed just to give a full force to the relief measures announced by the finance minister. Now, the second line, which is very important, this ordinance provide an extension of compliance time limit contained in rules, notification or prescribed in the specified act. So please note that this ordinance does not in any sense provide relaxation other than providing an extension of a time limit. Now there is a section 3.1 and a subsection 3.2, and the interpretation of both these sections is key for understanding this ordinance. When you go to section 3.1, it extends the due date, meaning thereby a due date is replaced by a new due date, that is 30th June. But when you go to section 3.2, which deals with the payment of any tax or levy, there is no extension of time limit. So please mark my word, there is no extension of time limit, rather it provides only relaxation for the purpose of interest payment. Now it covers all the dates which are notified or prescribed or contained in the rules. So it broadly covers everything. It is not necessary that any date which is specified in the act alone is considered. Now the specified acts are hello. So these are the specified acts. A specified includes wealth tax, income tax, security transaction, commodity equalization levy, black money, and direct tax, vivasya viswas. Now I have broadly divided my presentation into these 5 broad categories. In the first part, we will discuss the aspect relating to filing of income tax return, any other return, report, document, etc., which are provided under section 3.1. The second part deals with the payment of interest, which I believe is a key because there are lots of query or lots of I would say aspect which require to be considered in the manner of how to calculate the interest for any delayed payment. In the third part, we will discuss the fate of the assessment proceeding and penalty proceeding, or what type of assessment or penalty which are covered by virtue of this ordinance. In the fourth aspect, we will discuss the other miscellaneous provisions which are covered by this ordinance. And the last is relating to some practical issues which can be envisaged under this ordinance. So I will discuss what view can be taken or possibly what contrary view can be possible, and I will pose how one should take it forward. Now the filing of return, report, etc. So if you read the section 3.1, which I believe is very wider in terms, and it envisages every type of compliance required by an SSC as well as the department, and in all those cases where the due date is falling between the 20th March and 29th June, it shall stand extended to 30th June. Now for the assessment year 1920, and if you recollect, the finance Minister which issued a press note is heading, the first line is on the assessment year 1920 compliances. So for the assessment year 1920, all this income tax return, either a belated or a revised return, which were supposed to be filed on 31st March or by 31st March, now all can file till 30th June. The important point that comes out is respect to the issue of notice. Now, if you read section 143(2), it says that a notice for scrutiny assessment can be issued within the 6 months from the end of the financial year in which the return is being filed. So take a situation that for AY 1920, you are filing a return within this extended due date. You will receive the notice for scrutiny assessment, if any, by 30th September 2021. So we will have a situation in 21 whereby you will receive notices for two assessments simultaneously. One for the assessment year 1920 and secondly for assessment year 2021. Because 2021 there is no such extension and the outer time limit will be 31st September 21. So technically the notice for issue of such scrutiny assessment automatically get extended. Now take a situation, my second question is, can I file my return of income in response to notices issued, say for example 153A or 147 within such due date of time? My obvious answer is yes, for the simple reason is that when take a situation that there was a surge in the month of December 2019 and in pursuant to that they have issued a notice 153 in the first week of March. So the due date, the statutory due date, if in the notice is 30 days, so it is expiring on 31st March, that time period shall automatically covered by this ordinance and get extended to 30th June. So all these income tax returns which are required to be filed in response to these sections, you can file till 30th June, provided that the statutory due date shall fall after this 20th March 2020 only and not otherwise. Now TDS compliances. The TDS compliances, as we know, those returns for the annual TDS return for the financial year 1920 are due in the respective month, in the month of May, maybe 24 to 26, 27. So all these return can now be filed till 30th June 2020. Now what type of report, document or a statement which this ordinance envisages? These are the few example of it, and probably in case I am missing out some of the forms, probably that can definitely be covered. So I am taking 3 of the example, the aseptic compliances under section 285BA. So this compliance is due in the month of May. Now that can be complied till 30th June. Similarly, a country by country reporting in a prescribed form 3CAB, you can file the financial 1890 report by 30th June. It was even actually scheduled due on the 31st March. So these are the broad list of returns, report, statement which I am discussing right now can be filed, subject to the point that I have highlighted above, that the notice of scrutiny now can be extended beyond the due date, original due date. Now I'm coming to the second part, and which I believe is very important, and I understand that lots of people have query on how to interpret section 3.2, or rather how to determine the interest payable. Now for section 3.2, when you carefully read, it says that in a case where due date for payment of any tax or levy has been specified or prescribed under this act, and that due date is falling during the period 20th March to 29th June, on such delayed payment, the taxpayer is liable to pay interest not more than 0.75% per month. Now, please note that there is an interpretation whether the interest at 9% or 12%. You may have read somewhere on some of the documents which are available online. Probably that interpretation, in my view, is incorrect totally. It is incorrect to assume that the interest for the per annum is 9%. You have to strictly adhere to the argument that 0.75% per month or part of the month. Now, if you go to the definition which is provided in the explanation to 3.2, it provides a definition of period of default. What it says, the period of default means the period between the due date and the date on which the amount has been paid. So please note that for this period of default, you will get the relaxation of 0.75 per month. So in my view, only for the 3-month period, you can get the benefit of this interest rate and not otherwise. Now, a second question is, can I defer my obligation to comply with the provision of the specified act till 30th June? Now, this is a very key to understand. Now, when I go to section 3.2, it only extends the time limit and it only provides a relaxation in terms of the interest rate. Now, take a situation that on 31st March, I have received a bill for professional services. I'm not deducting TDS. I'm deducting on 30th June. I'm taking an argument that under section 3.1, every type of compliance is included, and therefore any compliances like withholding TDS being one of the obligation which was due on 31st March, which I could not, and I do it in the month of 30th June, and therefore by plain language of 3.1, there is no default on my part. Now at this juncture, please read the second proviso to 3.1, because when you go to section 3.1, it envisages all type of compliances. It envisages all type of payment. The word payment, which I discussed in the last segment of my presentation. So in that context, please read the second proviso, which is there on the screen. It says, provided further that such action shall not include payment of any amount as referred to in subsection 2. So in other words, where there is a question of payment of any tax or levy, which is a domain of subsection 2, where there is no extension of a due date, you cannot take a plea that by virtue of 3.1 the due date is extended. So in above cases, since the TDS is a payment which is governed by 3.2, you cannot take a plea of subsection 3.1 by virtue of the second proviso. So it carves out the payment of tax and interest out of the 3.1. So for payment of tax and interest, there is no extension of due date. Since there is no extension of due date, you are supposed to pay with a lower interest rate. That is a clear interpretation emerging out of that. Now we will discuss how this will be interpreted in different scenario. In fact, I thought that I could interact with many people, but just I came to know this is not possible, and for obvious reason that I understand. So what I will do, I will pose a question and then I give a 5-10 seconds for your thought process. You just answer in your mind or note down somewhere, and then we will interact as indirectly interact that this is correct or not. Just evaluate. Now the first question is, a TDS deducted on 31st March of rupees 50,000. The due date for remittance is 30th April 2020. Now if the taxpayer makes the payment on 30th June, then on delayed payment, the interest is payable at 0.75 months. So this is a classic case which is falling within the scope of 3.2, where there is no complexity as such. So the due date was 30th April. Since I am not making a payment on 30th April, but I chooses to pay on 30th June. So for the period of 2 months, I am making a payment beyond my due date, and therefore by virtue of 3.2, I shall be payable the interest at the rate of 0.75% per month. Now take a such a situation that in the above case, if 30,000 is paid on 30th June and the balance is paid on the July. So what I am doing here, I am taking the partial benefit of this relaxation, and for a balance amount for XYZ reason which I could not repay to the government, I take a 1 month more time and pay in the month of July. In such scenario, on a 30,000, since it is paid before the 30th June, you will get a relaxation and you are supposed to pay only 0.75%. And for 20,000 which you have paid beyond that date, you are required to pay 1.5% for 3 months. So for a 20,000 amount, you have to calculate as if the ordinance was not in place. Now the third question, whether an SSC can defer the obligation, as I already discussed, obviously my answer is no. Now take the fourth situation, which is very interesting. An advance tax installment for the financial year 1920 due on 15th March 20 has been paid on the 30th June 2020. Now the question is how to calculate the interest. or in other way, can I take the benefit of this ordinance? Now, let me say that as the ordinance clearly state that any due date fall after the 20th March and before 29th June. Since the due date for payment of advance tax was on 15th March 2020, so for obvious reason, my date is not falling within this statutory dateline which are provided in this ordinance, and therefore my case is absolutely outside the purview of this ordinance. So I have to pay interest at the 1% under section 234B as if no ordinance was in place. Now, if you read section 211, the proviso provides that in case when you make payment before 31st March of the financial year, it shall be considered as a payment of advance tax for the purpose of income tax. Now, section 3(1) extend the due date prescribed or notified under the Act. So one can draw an inference or take an argument that by virtue of section 211, my payment of advance tax due on 31st March shall get extended to 30th June by virtue of 3(1). Now I can again read the proviso which debars me from taking that view, because it says that payment of any tax is not governed by that. So I have to go to section 3(2), and when I read section 3(2), it says that for a period of such a default, you are supposed to pay interest at the rate 0.75%. So therefore, if you have missed the deadline on 15th March or 31st March, in my view, one can draw an argument or draw an inference that the advance tax which I could have paid on 31st March, to make it that payment or to be treated as that payment as an advance tax for the purpose of Income Tax Act. And since that time limit is remain 31st, which is a due date, but I'm making that payment before 30th June. So technically from payment from 1st April to 30th June 2020, in terms of section 234B, you may charge interest at the rate 0.75% as against 1% under section 234B. Because this section is for default period, and if you recollect from the previous slides, the default period has been defined as a period starting from the due date till the date of payment. So in substance, a payment of advance tax due on 31st March, paid on 30th June, so there is a default of 3 months, and on this 3 months you can pay, or you are required to pay at a reduced rate of 0.75% 234B and not 1%. So this view is possible to argue. I understand that since there is ordinance has been issued in a short time, but this interpretation in my personal capacity or personal view is absolutely correct. Now take a further example on a self-assessment tax payable for the assessment year 1920. So you are filing a belated return or a revised return, then can you claim the benefit provided by this ordinance? Now again, the question which we are required to consider is the due date and the payment or a default period. Now you read section 140A, it says that self-assessment tax should be paid before the filing of return of income. Now take a situation, or now because we are dealing with assessment year 1920, my filing of revised return, the due date has been extended to 30th June. So by virtue of operation of subsection 1, at first stage my due date is extended. My that due date will be considered for the purpose of subsection 2, and when I determine my period of default, it says that from the due date to the subsequent date of payment. So one can draw an argument that even on the self-assessment tax which is payable, and since I am making a payment after the due date specified under the Act, that is to say a date of filing of my return, but I am making a payment before 30th June. So on the same principle, for that 3-month period, the interest on the tax component, which is determined as a payable, you can take the benefit of reduced rate of interest. This is where the interplay between section 3(1) and 3(2), which is very vital. Now take a situation. Oh, sorry. Okay. Now the answer is on that. Let me discuss. If a taxpayer is disclosing additional income for the assessment year 13-14 under section 153 or 147, So take a situation, there was a notice under 153A in pursuant to search, and in the return of income, you are making a disclosure of 1 crore rupees. Now on that 1 crore of rupees, you are anyway liable to pay interest as well as the tax. So for the interest calculation, we have to determine, say from the assessment date here, the 234B interest start from the 1st April 13. Now by virtue of subsection 3.1, if my due date is extended to 30th June. So in that position, what happens? That payment which was due to be paid on 31st March, on the same principle, I have to pay interest for this 3 months at a reduced rate. But for other period, so from 1st April 13 to 31st March 2020, there was no such relaxation. You have already committed a default, because when you read section 234B, the default starts from the first day of the assessment year. But since that relaxation is provided by this ordinance for a 3-month time, and for that delay, because you are also delaying your filing of return of income, you are filing your return not on 31st March, which is a scheduled due date, but a date is provided under this ordinance by on 30th June. So for that 3 months being a default period, again you can take the argument that for this 3 months at least, your liability, the tax component on which you are supposed to pay interest, is at a reduced rate, not at a 1%. I hope everybody is getting. In case you have any query, just put down on a paper. We will discuss eventually on the last part. Now the another important point is, what would be the consequences if the taxpayer does not make the payment till 30th June 2020? So the answer is, you cannot take a benefit of this ordinance unless you make the payment before 30th June. So interest shall be in that cases payable as if the ordinance was not in place. So you are supposed to pay, take a above situation, you are filing return of income on 31st July. So in that case, you have to pay interest at the rate 1% starting from 1st April to 31st July, and pay interest at 1%. You cannot take the benefit of this ordinance. So similarly, take a situation, you have dividend declared on the 15th March and you have 15 days time limit to make the payment of DDT. So in case if you make the payment of DDT on 30th June, you will be liable to pay interest at a reduced rate starting from the due date after the say 1st April till 30th June by virtue of the ordinance. So all can interpret in that way, whether it is STT or CTT or any other tax which is leviable under any of the specified act, and by in a way which I have discussed how to interpret the subsection 3.2 qua subsection 3.1, and you can determine what amount is payable. So before I go further, the one point which is very important to notice, section 3.1 provide or it replaces due date other than the due date for payment of any tax and levy. And in contrast, when you go to subsection 3.2, it provides relaxation to every taxpayer for delay payment as against the interest which is provided in the act of 1% or 1.5%. You are required to pay flat interest of 0.75%. So this is a key difference between subsection 3.1 and 3.2. Now subsection 3.2 further provides that no penalty and prosecution for any of such default. So what provides that, say there is a case which we have first discussed, the TDS was deducted in the month of March and you are making payment on 30th June. So in that case, is ideally under normal circumstances it is default, and probably department can issue a notice for prosecution, which is become very general nowadays. But by virtue of this ordinance, there cannot be any penalty or prosecution for such default. However, please note that if you have already committed a default prior to 28th March 2020, then you are not absolved from these consequences. Now, fees payable under section 234F. So in case when you are filing late return, you are supposed to pay 234F fees, because that section only make a reference to 139.1 and not 139.4 or 139.5. So ideally speaking, that the ordinance does not provide any relaxation whatsoever. Now for 234E, obviously when you read that section 3.1, it says that the due date is extended to 30th June, and therefore in clear terminology one can say that since my due date for filing of return has been extended, there cannot be any delay or filing fee for under section 234E. Now we will have a discussion on the proceeding which are ongoing under section 31A and 31B. I hope so far as the determination of interest aspect is concerned, we all are clear. I think I'm not going too much fast. I am keeping a time for the purpose of having a discussion on that, because that is, I think, a tricky part of this ordinance, because lots of compliance will take place moment the things are getting or starting to get normalized, and in that scenario we will have lots of questions. But I believe that the government will certainly react proactively. I think they will come out with notification, lots of notification, because if you see, this ordinance will be at one place and we will have several notification down the line. So probably we will have a clarity on that. But in case anybody wants to comply, definitely he can take this view and just go ahead. Now, under this aspect, I will consider various proceedings which are ongoing under the Income Tax Act, or which could have been going on as on the particular date, and what is the fate of those proceedings. The first is rectification proceeding under section 154. So when you go to 154, it provides an outer time limit of 6 months for passing an order. So take a situation, if I have filed an application which is due for passing a rectification assessment order by 31st March. So in all such scenario, the assessing officer can now pass a rectification order till 30th June 2020. Now please note that in case when there is the outer time limit is not expiring. So take a situation, I have filed a rectification application the first week of January. So I am anyway getting a time limit of 6 months. So I am not covered by this ordinance, and probably in that case, the assessing officer is still duty bound to follow the time limit which is provided under the Act. Divisionary power under section 263 and 264. The another assessment or another notice which are generally we receive at the fag end of the previous year on the 31st March is 263. So for any assessment order passed by the assessing officer during the financial year 17-18, the scheduled date was 31st March for a revision of that order on fulfillment or being categorized that order as an erroneous as well as prejudicial to the interest of revenue. The principal CIT was well within his power to open that or touch that order by 31st March. Now on all those cases which were due for revision under section 263 on 31st March, now the principal commissioner will have 3-month breathing time to recheck those orders, and probably he can take still action under section 263 within this 3-month period of time. Similarly, an application under section 264 and SSC is still well within his reach if he files after the extended time limit of the 3 months. Now, reassessment proceeding, and I'm sure this is not an exception to anyone. I think lots of notices were due on this 31st March, but because of this COVID-19 pandemic cross, and in particular in India, I think since they are not functioning, they will get a breather time of 3 months for issue of these notices. Now for assessment year 13-14, obviously the condition of being escapement more than 1 lakh, they can issue. But for assessment year 15-16 and any subsequent assessment year, since there is no monetary limit provided under the sections, it can still be open till 30th June. So for 15-16, there is no rider in any case, whether that ordinance is in place or not, it does not make any difference. The only thing is that they get the 3-month extra time, particularly for AY 15-16. Now this is very interesting, and please note that in case the assessing officer is issuing notice on 30th June, in your case for AY 13-14 or for any assessment year, he will get an extra period. The time limit for completion of that assessment will be 21 months instead of 12 months, which is provided under 153. Now when you read section 153, it says that in a case where a notice under section 147 or 148 has been issued, the time limit shall be 12 months from the end of the financial year. So generally we received notice on the 31st March. The time limit would have been 31st March 2020. But since it is issuing notice on 30th June, the 30th June period expiring on 31st March 20, and again he get 12-month extra time. So the reassessment proceeding, which will be initiated in June 2020, the time limit for completion of that assessment completes on 31st March 2022. So that is a very important thing and which we have to keep in mind. Now penalties under chapter 21. So again, this section says that any action, even on the part of the department, they will have a breather time of 3 months. So all these proceedings which are getting time barred on 31st March are definitely extended, and till 30th June that order can be passed. So be ready for receiving the order in the month of June. Lots of order, probably lots of penalty notices or lots of notices for compliances. Similarly, if you read section 272A, it is more or less in the context of 271B originally for non-compliance of notice issued under section 142(1). Now, if you have received any notice, the compliance due date is on 31st March or falling due within this specified time limit, there won't be any penal action under section 270 because the due date has already been extended. But take a situation that a national e-assessment center has already issued a notice for an assessment year 18-19, and that notice has not been complied by you. Now, by virtue of lockdown, in any case, you get an extension, and that is definitely possible to take. In that scenario, the assessing officer can initiate a notice or a proceeding under section 270A for a non-compliance. Now I'm not taking any argument further whether that notice per se is valid or not, because the assessment in case is completed under 143.3, then there is no question of non-compliance, and that section is operative only in the case where there is a base judgment order when I am non-compliant. So I'm not taking that argument further, but I'm just restricting myself about the scope of that section, whether the assessing officer is well within his reach or is precluded, that is a question. And in my view, he can definitely issue a notice under section 270A. So where you have already missed the due date for compliance, you are not absolved, but you are still safe provided you fully cooperate with the assessing officer in subsequent hearing. Now, with respect to the assessment proceeding, as I said, with respect to 143(1) or 142 or 147, or any notices which are ongoing and which are statutorily due for compliance within the specified date, now you all can make a compliance till 31st March. So I do not see any issue or probably a query with respect to this. And in case there is a due date, you just write down, because now it is possible to mention or comply electronically through the login portal of an SSE. Just give circumstances that because of this lockdown, we are unable to gather the detail, comply the detail, and therefore request you to kindly adjourn. So it goes without saying in any case the due date has been extended, but it will look good, a gesture on your part that you are appreciating the circumstances and formally communicating the fact that you, because of some reason, you could not, because it may possible that some of the details are available, because now in case where a physical access is possible, being remain at home, you can also functioning from home. So to gather some of the basic detail, you can still comply. But since it is, I personally suggest you better file a letter making these facts to the notice of the AO, and just mention that please extend the due date, any appropriate date, then it will definitely be deemed as extended to 30th June. Now again, the assessment officer can also pass the final order under 143.3 read with section 140C, where there is a due date is extending in the month of March. So what I'm trying to say is there are lots of provision in the act, there are lots of compliances. So I have tried my best to envisage what type of things which are routine or routinely applicable to all the tax practitioner, all the SSEs, and I have listed down those proceedings here to give you an idea that this type of proceeding, how the picture will be post this pandemic. So these are, I'm visualizing a situation that once we will get the regular scenario, we are normal life, and probably all the compliance and everything will take place, then this type of proceeding will be revived. Now for appeal proceeding, again they have said that the due date for filing of appeal is also extended. Similarly, a department can also file the appeal before the tribunal within this extended time. So a leverage is given to SSE, then the department is also not placed at a less leverage place. So both are on the same foot. If the SSE is given a liberty, at the same time the department has been given a liberty. So these are some of the example which I have discussed here with to deal with the ongoing assessment proceeding. So please note that this principle will also equally applies to the proceeding if you are going under the other specified act. So the same principle will apply. So if you have any notice execution, we have lots of notices under section 10 of the Black Money Act. Now we have already challenged those proceedings for a different reason. We have gone into the interpretation, the intent, and for XYZ reason, and we have challenged those proceedings. But by virtue of those proceedings, there were some notices where due date is in the month of March or April. So that got automatically extended. So we will again, since that black money proceeding is not a the proceeding which is online, whereby we have to represent physically before going before the joint commissioner or the prescribed authority. So definitely that shall stand extended. Then there is, I don't need to write a formal letter because it is not possible to go out, and those proceedings shall automatically get extended to 30th June. So this is how you have to interpret section 3.1 with respect to the compliance deadline. Now I'm covering the other measures which are not directly covered earlier, but yes, that will be also key for a discussion. So take a situation for the linking Aadhaar with the PAN has been invariably extended to 30th June because it is also compliance. Any action on the part of the SSC, and then definitely the due date has been extended. So please note that since the due date has been extended, in case of payment which is subject to a TDS deduction, I have to deduct TDS as if the PAN is linked to Aadhaar. Now what I'm trying to convey here is that take a situation that had this ordinance not in place. So on any payment, if I'm making any payment today to my employee or any vendor who has not given me any declaration that his Aadhaar is linked to his PAN, so in that scenario, I have under obligation to deduct a TDS on a higher rate than the rate specified under the chapter 17, and therefore all these cases are currently given standby till 30th June. So on 1st July, take a situation if you have not received any confirmation that the PAN is linked, then from 1st July, you are supposed to deduct higher TDS than the rate prescribed under say 194C or 194J. So this is very important point. So I have specifically included here. Now Viva Se Vishwas Act, I think I understand that there is a separate webinar is going to be there. So I'm not covering that aspect in detail because it is a act in itself which is having various peculiarities, various interpretations. There are many FAQs, and so I'm just precluding myself from commenting upon. But yes, on a plain vanilla thing, I would say that the payment of due date has been extended. So the original scheduled date of making payment without any additional charge was 31st March, and it is now you can make a payment till 30th June. So again, you can, in my interpretation, there is a new due date for extension of filing your declaration. So you can still file your declaration, as I understand. I think the facility is already available, but only the relaxation is provided with respect to payment of time. It is on the same way goes for 3.2. Now relaxation in case of trust, and here I want to make a very interesting observation. So the first observation is with respect to filing an application for registration. Now under 12AA, even under this new Finance Act 2020, that there is a new provision where every trust has to make an application for a renewal. So they will get a first 5-year flat renewal, and then they will have a detailed analysis, detailed scrutiny, whether they are actually imparting a charitable activity or not. So in all those cases, whether it is a new trust or an existing trust where they are supposed to make an application, now they can make an application till 30th June 2020. Now the second part is very important. Now if you read section 11.2, it provides that a trust can accumulate its income for its specific charitable activity and that accumulation shall be for a period of 5 years, within which the trust is supposed to utilize that fund for that specific purposes. Now take a situation that a trust has accumulated fund which it could not utilize. Now, if you read the section language of section 11.3, it says that such accumulation, if not utilized, then it shall be deemed to be the income of the trust in the year expiring after the year original schedule pay. So in a simple word, 5 plus 1 year. So take a situation, the 6th year being the 31st March 2020, there may be a situation that trust could not utilize the fund for the intended purposes. So I am creating a hypothetical situation whereby say a trust has accumulated a fund of 1 crore. Now post 15th March and ideally 23 or 24th, where there is a complete lockdown, there was a case that it could not utilize. So in my interpretation, I can say that the trust will get an extended period of 3 months for the purpose of making application of those funds, and still it can claim exemption under section 11. Now please note very important point which I want to highlight. In the context of section 3.1, the reference is given to any payment. Now second proviso to 3.1 precludes or carves out the payment of only tax and levy. Now this payment is not a payment of any tax or levy, but a payment which is necessary or essential for the purpose of claiming any deduction, exemption or allowance under the act. So it may possible that the separate notification then that will be issued by the department, this scenario will be definitely covered. But be it the case, in a case if it is not provided, I still hold a view that for the purpose of making payment to fulfill the obligation under section 11.2, where the statutory due date is 31st March 2020, you can still make the payment till 30th June and avail the exemption provided for under section 11. I hope everyone is clear. On for the financial year 1920, when I am filing my return of income of a trust, any application made post 1st April and before 30th June, you can definitely save yourself from the rigors of 11.3. This is a rational interpretation which is possible emerging out of the language of section 3.1. So in case where you have cases where trust has supposed to face the consequences by virtue of 11.3, you can definitely save yourself. The payment of tax under section 115 or 115 QA, again in case of any buyback or a dividend, as I discussed earlier, the due date remains the same, but for an extended period, you are required to pay interest at a reduced rate of 75% per month. So there is no extension of due date, but yes, for that period of delay from the due date, you are charged interest at the rate of 0.75%. And the second condition is that payment is made before the 30th June. Now PM Care Fund, I think again it is now the department has already issued lots of clarification, and given this ordinance makes a very categorical statement that this deduction will qualify for 100% deduction without any limit. Now here I want to highlight two important points. Now if you read the Finance Act 2020, they have made an amendment to the section 115BAA and 115BAB. Now from the year starting from 1st April 2020, all those companies who have opted for this lower tax regime under section 115BAA or BAB, that won't be entitled to claim deduction under section 80G. Now the 115BAA and 115BAB is operative from the assessment year 2021, that is to say this year, the returns which are due in this September, but from the next assessment year they are not entitled. So in case all those companies in particular 115BAA who have evaluated the option for a lower tax regime, please reconsider your proposal, because it will be a thin line difference in a case where company is having a turnover of less than 400 crore. They are already at a tax regime of 25%. They can still get the deduction under the section 80G. Now, if you opt for a 22%, I'm just saying without any surcharge and cess, and you are foregoing the right to claim the donation as a deduction. In some of the cases, maybe donation is part of your CSR expenditure. I think it's a good time you revisit all the calculation and see what is the difference. In case the difference is not of a much significance, I think then it is advisable we can let it go 115BAA and then opt under the regular scale. Now the taxpayer definitely will have a choice for the payment which is making from 1st April to 30th June to claim either in the assessment year 1920 or a 2021. So it's a good move. I think all the taxpayer, including corporates and individuals, if they want to mitigate their tax liability to some extent, they can definitely make this contribution, so that for the assessment year 1920, if they are filing return, they will get the refund appropriately. Now this contribution will also qualify as expenditure. I think I do not require to deliberate much on that aspect. Now I'm touching upon the order which has been issued under section 119 by the CBDT on the 31st March 2020. Now technically this is not part of the ordinance, but I thought that this is one of the measures which the government has already taken or the department has already taken. I think I should spend at least 2 or 5 minutes on just explaining the scope and the benefit which is available. Now, in substance, what it says that where the lower TDS application has already been filed for the current year and which is yet to dispose. Now, I'm intentionally saying nil certificate because it is, I haven't seen any lower certificate where the department has issued say yes, okay, there is a nil certificate is issued. So I would nil certificate is just a myth, but whatever the case may be, but validity of this certificate, in that case what has been provided. So in case we have a certificate for the last assessment year, that validity is extended till 30th June. Now here there can be a lots of questions. The intent is to avoid the hardship. Now take a situation that for last assessment year, the department had issued a lower TDS certificate, but there is a cap on the payment. So there is a cap of rupees 3 crore. Now that 3 crore cap has already been exhausted in last year. Can I say that in the current year that lower TDS certificate is still operative and any payment made from the 1st April, I have to assume as if this is a certificate issued and is in force? The ideal view is that this view is possible to be taken because the intent is very clear. So I cannot strictly interpret the language of that order because that order has been issued for the benefit of the assessing. And every year being a separate assessment year, every year there is a separate obligation of withholding. And when it is said that the validity has been extended, then validity is extended in the sense has to be seen that a fresh certificate has been issued for a period of 3 months. So in those cases where the limit has been exhausted, yes, definitely one can take a view and still continue deducting lower TDS as per the last TDS certificate. Now in case there is a last year TDS certificate, but current year they have not filed any application. Now this order also provides that in those cases they have to expedite the process of filing application. There is already a separate procedure which has been provided. It is a mail on which you have to give every details as if you are filing an application online, and those details will be evaluated by the assessing officer on mail, and there will be thereafter the certificate will be issued. So I think we have to see how that practically become effective. But yes, currently they have provided this condition. So in case where no application has been filed by any of your vendor in current year, at least get a declaration from them that at least they will file an application. So this is not a condition again, but yes, I think on an advisable view, since the order says that they have to file the application as possible as the earliest, so at least give a declaration, because then outer time limit is 30th June, and if you are supposed to make a payment in the month of April, probably you cannot foresee or you cannot anticipate something which is going to take place after a 2-month period of time. but at least have a declaration or a mail from the client that we are in the process of filing that application. I think that will serve the purpose. So in case of a non-resident or a foreign company, again that order says having a permanent establishment in India, then the flat rate of 10% is provided. So in case of a foreign company having pay in India and you are making any payment, then you are supposed to make a TDS at the rate 10%. Now, this is the point which I was discussing, that this ordinance is envisaging, in fact the government is envisaging that there are lots of possibility, lots of issues that can come up in interpretation, and that's for a specific reason they have already included a power to issue notification. So as I rightly said, that this whole ordinance will eventually boil down to a notification, and this aspect we are covering here. Now if you read section 3.1, it says that in a particular 3.1c, where this is when the heading says when the specified act is an income tax act, it says that for the purpose of making any investment, any deposit, any payment, this is the word payment which I was referring in the context of 11.3, acquisition, purchase, construction, or any other action by whatever name called, for claiming any deduction, any exemption, or an allowance under the Income Tax Act. Now, if you read this particular two line, it is a very important, because it is a scope of this particular clause. And when you read this clause, it covers all the possibility, even the possibility of claiming any deduction. Can I say that a deduction, a business deduction, is also deduction which I can claim? So take a situation that any payment which I was supposed to make on 31st, we have paid till 30th June, I can still claim a deduction. The sections, these particular sections specify as section 54 to 54 GB. So in case of any transfer of capital asset, and if you want to claim an exemption for making an investment in a residential house, so the word construction or a payment or acquisition or a purchase has been included. Similarly, under chapter 6b, from 80C to 80GGC, so taxpayer will have a choice here. They can claim the deduction either in the assessment year 1920 or 2021. So this is another chapter 6b. So far as the first two limb is concerned, I think we have absolute clarity. So in case we have a client, when there is a query of either claiming deduction under 54 to 54 GB or a claiming deduction under chapter 6b, I think we can easily answer that in those cases you have an outer time limit to make a payment till 30th June, and you can definitely claim. So if they have already exhausted the limit of investment, they can claim in the subsequent year of it. Now the third limb is very important, and the language says any other provision of the act subject to such condition, fulfillment of such condition as notified by the government. So this is the area which is as of now very open. I think lots of query can be analyzed, lots of things can be analyzed here, and some of the things which I could visualize as of now, I have covering in the next slide, that what type of cases are covered, whether the case of a business deduction of claiming, say if you read under section 35 or 35 2AB or a depreciation, how it can be interpreted, that we will discuss in the second part. Now this particular section also make a reference in the case of an SEZ. So an SEZ which was supposed to commence its operation on 1st April 2020, they are now been given a relaxation and provided that they can still start their operation before 30th June, and the reduction under 10AA will be qualified. Now please note that whether is it a necessary thing to demonstrate that a practical difficulty has caused to a particular SSC to claim the benefit of this ordinance? My view is it necessary to demonstrate that yes, look, I am deprived from making any payment and therefore I should be eligible to get the benefit of this ordinance? In my view, that is not in any way warranted. If you read the language of ordinance, they have across all the SSC, all these SSC have given a uniform applicability of this ordinance. So I'm not supposed to demonstrate. Now take a simple situation or a simple example. In a case I'm an employee working in a Noida-based company, I am paying a rent to a builder or a society or a particular owner. Now the Noida authority has already issued a directive whereby they have said that no payment of rent should be collected for a period of 1 or 2 months. RBI have also given a direction to all the banks to provide a moratorium to each loan personnel for a relaxation or a moratorium period for payment of installment or a EMI. Now visualize a case. I am an employee. I am claiming an HRA benefit as well as the benefit under section 24 of an interest payment. Now I have sufficient fund in my balance. I have already a fund from which I could easily make a payment of rent as well as EMI. But by virtue of this ordinance or by virtue of the directive of say Noida or the RBI or say my bank is ICICI Bank, and by virtue of that ordinance, I am taking a benefit. I am optionally taking that benefit. In my view, this is not a criteria to see whether I have a practical difficulty or not. So long as I am covered by this ordinance, I can take the benefit. Now, the question which I have posed is an interesting itself because it is neither governed under section 54 or 54GB or it is falling within chapter 6B. It is a classical case of falling under any other provision of the act, and therefore it is very important. So in my view, probably if the notification which eventually comes down by the government, I think this will be the first of its case whereby the government will clarify that yes, in the case of an HRA or interest which is to be paid or claiming under section 24, even though you have taken moratorium period, where the application of that moratorium provision itself is a different thing. Whether that payment is considered as a payment when it is converted the interest into a principal amount or not, that's a second question. That's a different question altogether. But in substance, it is a payment, and therefore, in my case, such type of cases will later on be notified by the government. Now, let us understand or visualize some of the question which I want to highlight. Take a situation that plant and machinery was purchased by SSE, but it could not be put to use because of this lockdown before the 31st March. Now that installation takes place on the 30th April 2020 because of some relaxation. And I'm honestly, it is just a coincidence that I have put the date of 30th April, and there is a lot of speculation going on that the lockdown will persist till 30th April. But this is a 30th April 2020. So can I claim the depreciation in financial year 1920? I hope you understand the question. What I'm trying to convey is, can I say that when section 3(1) envisages every type of compliances which were due on 31st March, those due dates shall extend it to 30th June, and therefore a commissioning of a plant or an installation of plant is also a compliance indirectly for the purpose of claiming any deduction under this act. As you have seen in my previous slide, can the cases will be covered by this ordinance? Now take a second situation. Now I will answer all these questions in a one go because currently, since there is no clarity, I would not say a clarity because I would put it in a different way because the notification is yet to pass. I think these are the different situations we are envisaging. So for all this situation, I will answer at the later stage. Now take a situation in second above example. If that installation of plant and machinery is supposed to be happen in a notified backward area as specified under section 32AD. Now 32AD is also a unique section whereby just like an investment allowances, where the due date is 1st April 2020. So take a situation, the same example in above case, the installation of plant and machinery takes place on 30th April. Now 32AD qua 32, there is a vital difference. A 32 being a general claim, it's a depreciation which is allowed. A 32 is a specific section. That section itself poses a compliance requirement. Section 32AD says that you have to not only purchase the plant and machinery, but also you have to install for the purpose of claiming 32AD. and which is this language which is already in the part of the language of 32 AD, it can be said that this is a compliance which is covered by the section 3.1, and probably that case may be covered by virtue of 3.1. So those plant and machinery which are installed after the due date specified under 32 AD, the sunset clause, probably you may get a deduction in the financial year 1920 itself. So this is one way of interpreting. Now take a third situation, whether the business deduction by way of a payment to approved research or institution or 35 CC, etc. So again, this is the same principle. Whether can I argue that any deduction under the act or any action, the connotation of the word any other action for the purpose of claiming deduction, exemption, allowances shall also include a business deduction or not. That is a key consideration, and therefore can I say that all the payment are covered by virtue of this? So this is a thought process which we require, and I think I will deliberate after concluding my these two further questions. Now take a situation that in a case of a purchase of a motor car, the new rates have been already notified, whereby a higher rate of depreciation is available if the car is purchased before March 2020. Now take a situation that you have already placed an order, but by virtue of this lockdown, that car could not be delivered before the 31st March. So again, there is a precondition that a car is required to be put to use for the purpose of claiming depreciation under section 32. So again, the section compliances, or I would say a due date for a compliance, there is a practical difficulty. The SSA could not put to use. So these are the cases where there will be a genuine difficulty, there will be a practical difficulties, and if a contrary view will be taken in that case also, the SSC can be said is deprived from a genuine act which is beyond his control. So these four questions, if I have to take one argument which I've already taken, that since if I go by the literal interpretation that any other action for the purpose of claiming any deduction or exemption or an allowances, an installation, an act of installation, or an act of commissioning, or an act of driving car to make it put to use is also an action, and therefore probably by virtue of literal interpretation one can take a view that in the notification that will come, that will be eventually passed, these type of cases will be covered. Now take a different view. Now if I am sitting on the other side, I would say that read section 3.1c. In the first part, definitely this any other act or any other action is already included, but if you go to the Roman 2, where it says that in case of an SEZ, a unit which is set up in an SEZ, a date for the commencement of that operation is extended, if which could not be start on the 1st April. So a view can be also be taken that for such action which is aliking to a commencement on operation or an installation, the legislature has already envisaged a different situation, and in that particular clause there is no such scope for issue of notification. So when any other action is required to be interpreted, that cannot include an activity which is more or less activity of commencement of a business which is envisaged under part 2. So the department may take a view that no, this will not include an activity of installation of a plant machinery or installation of a machinery at any unit, that will not be covered, and probably you are not eligible to claim any deduction in financial year 1920. But yes, for a normal depreciation, yes, you can claim depreciation in next assessment year. But the question will arise particularly in the context of 32 AD when there is already a sunset clause, or in a case of claiming depreciation on a motor car at a higher rate where there is an outer time limit of 31st March that cannot be revived. So one may also argue that date is also extended because it is already notified in this act, and therefore by virtue of 3.1 all this due date is also extended to 30th June. This is a one way of argument, and possibly this is not, I'm saying, absolutely incorrect. It is a very rational argument. The only thing is that we have to see the overall intent, and I'm very much sure that when the notification will come, probably all these practical scenario, because I have hypothetically taken this situation, but it is not rare, and I think many of your client is going to face this. I'm not sure that none of this query will be there. It's like an alien query, but I really anticipate moment these operations or business operation get normalized, where we are in the process of finalizing tax audit and everything, probably we will have such type of thing. And I think by that time we will have lots of notification, and I am really hopeful that these will be taken, particularly in the context of 32 AD or a depreciation, higher depreciation, for a compliance for put to use, can be said that it is extended by virtue of 3.1. Now the last case which I have covered is with respect to the taxpayer who wants to claim their benefit under section 24 and HRA. So what happens that this might be a very rational or a very reasonable case to fall within the limb of any other deduction. Because if you see section 54 or 50 GB or chapter 6b, there is an outflow of payment. Now here under section 24 or HR under section 10, claiming exemption where I have to make a payment of rent, and by virtue of some directive of authority, I have been given a relaxation for payment. So probably those type of cases that the government may comes out in a notification and says that, look, the objective is very clear. It is to provide only relaxation with respect to this type of payment, and the any other action is already included for the purpose of ensuring that such type of activity which otherwise could not be covered above but are covered here, and therefore the claim of depreciation or an investment allowance, etc., which are just, there is a timing difference, you are anyway going to claim the depreciation on that motor vehicle or plant and machinery, except 32 AD. Those are the claims which are otherwise generating only a timing difference, and therefore it is not in a way which we interpret or we have an intention to include. So this is a time will tell probably, but these are some of the questions which I have posed, I think, which in this period of time just I could visualize, just to make it ensure that these are these type of the cases which we can cover or probably we will have in the days to come. So I think these are the broad point which I wanted to highlight through this presentation. I think I understand that there may be a several possibility of having a different thought on that, and definitely I will cover here. The one point which I miss, just I want to highlight with respect to 147. Now in the 147, in a case of a foreign asset, now in case of a foreign asset, there is an extended time limit of 16 assessment year. And I think this is very key point which I want to highlight. Say take a situation, there was a search in the month of December 19, and during that search the information or relating to the foreign assets found which pertains to assessment year 3-4. So because the assessment year 3-4 being the technical assessment year which could be reopened till 31st May by virtue of the extended time limit under section 147. Now what I want to highlight here is that the action of the assessing officer to reopen the assessment till 30th June, I want to argue in a different way. Yes, on a plain meaning of 147, yes, definitely it can be reopened till 30th June. One legal argument which is possible to take is, and in particular this is applicable only in the case of the foreign asset, where the 147 reassessment is in question. Now the amendment in section 147 came on 1st July 2012. Now my point is, when on the 1st July 2012, if the assessment year 3-4 which could not otherwise be reopened, because at that point of time the outer time limit was 6 years, and that assessment year to reopen, that assessment year is already got expired when the amendment came into book in the legislative statute. By virtue of any subsequent amendment or an enactment, that proceeding cannot be reopened. So even for the assessment year 3-4, even as of now, during the course of search, either that has taken place past, or if it is taken place and the notice are yet to be issued, then in those cases it is a good case, and you may argue probably it requires little more research and deliberation, but there are hosts of decision on that that will support your contention. And in those cases, probably in my view, for the assessment year 3-4, it's a good case to argue that that assessment per se cannot be reopened, and by virtue of this ordinance, it otherwise cannot be reopened. So I think these are some of the issues which I wanted to really discuss with you. I think these in substance conclude my presentation, and I would appreciate if you have any query on that, you can definitely pose before me, and I would be more than happy to answer all your query.
Excellent. Thank you very much for such a detailed presentation. Virat, can you hear me?
Yes, absolutely. Thank you so much, sir.
Yeah. So the members would have typed their queries on the GoToWebinar, and WRC will share the screen with you. You can look at the questions and then read them and start answering them. Here they are. Can you see the questions?
Okay. Oh, yes. There are lots of questions. Okay.
Yeah. Okay. Please, you can start.
Okay. Now, with respect to first question, I think very good observation who has made. Now, if you read this ordinance, and in particular the explanation which I have referred to in my very second slide, the definition of default period is from the due date. The default period starts from the due date to the date of payment, and therefore when I make a payment, I fully appreciate had been these normal circumstances, absolutely correct. There is a 1 month relaxation which we are getting by virtue of this interpretation, because the default period starts from the due date of that payment. So the due date of payment was 30th April, and then from 30th April I have to consider, because of this ordinance language, I have to just overlook the language of the section where that the interpretation is correct. It starts from the date of deduction. I fully agree, but since in the language of the ordinance says for the default period, so for the default period, definitely I have to pay interest at the rate of 0.75%. So the default period starts from the due date, and the due date being the 30th April. So my first question, I hope those who has written this question get the clarity on that. Now coming to section 2, question 2. While section 211 provides that any tax is paid before 31st to be considered. However, does such proviso extend the actual date of 15 March and become a due date for fourth installment? If not, can this be called due date under 312? I think this is very good question, and I think I have deliberately considered this aspect. Now what I'm trying to convey, say there is a difference between section 3.1 and 3.2. Now 3.1 extend the due date for all the compliances other than the due date for payment of any tax. So when I read section 211, a tax due on 31st March, which could have been considered as an advance tax, now that due date is freeze. My 31st March due date is freeze, and since then from that due date I am making a payment on 30th June. So by virtue of the explanation, the definition of default period, for this 3-month period of time, provided I make the payment on 30th June, I get the benefit of lower interest. I cannot replace my due date. Please note that I cannot replace the due date 31st March as 30th June. I cannot read that. If I read in that way, then there is no interest as such. That section 3.2 only provide relaxation in the terms of interest. So what happens that for this 3 months, if you are estimating your liability, say for financial 1920, if nobody has paid tax or there is a shortfall, they may probably get a benefit if they make the payment before 30th June, and they can save an interest of 0.25%. So this is a very interesting thing, and you have to read in that context. There is no extension of due date. The due date is not replaced, and that's the reason, since the due date is 31st March only, and from 31st March to 30th June, for that deferred period, that a default period as per this ordinance, we have to understand the default period very categorically. We have to just forego what is written in the act, and for this default period you will be charged interest at a lower rate. So I hope this query will solve his question. If one has given donation to PM on 1st April, then whether he can claim in 21-22? Absolutely, there is an option given under this, that there is an option So I have a choice to claim. Even if you read the press note, this has been issued, it also clarifies that for any deduction, not only for PM CARES fund, even for any donation or any payment which I am making to an NPS also, or a fixed deposit or timely fixed deposit or a mutual fund specified, whatever may be, I will have a choice. I can claim in 2021 or 2022. So depending upon if you have already, there is a refund, it is not a good case to increase your refund, make it for next year. I'm very hopeful that in 2022, when we are filing, probably we will be in a better situation than this. We will strongly come out. And I think this is a small phase that will just go away like a whisper. The question 4, we have made an application for nil TDS before 20th March. Whether the ITO TDS can issue a required certificate June, if yes, how deductee can deduct a such lower rate after. Okay, so here, sir, what you have to see, the if you read that the order under section 119, you have to just mail this order to the concerned person and just state that this order clearly in unequivocal terms clarify that your last year TDS certificate is valid. So I presuming that you have last year TDS certificate is in force. In case there is no certificate is in force, then probably he will not consider your application. Here the assessing officer, then the ITO concern is required to expedite the process. You can at least mail him, you can file as if you have filed a fresh application and just remind him that please process, my payment is due. The benefit is available only and only if there is a last year TDS certificate was issued. If there is no certificate, then you cannot take the benefit of that order. Now question 5, so amount has been deposited in capital gain account. I think I'm unable to read the question. I think some different.
No, it has come.
The amount has been deposited in capital gains account over 54, and the time limit for purchase of the property is expiring on 15th April. Can one avail the benefit of acquisition of? Okay. So what the query is? There is an, so for the purpose of 54. Okay, got it. So what my answer is absolutely yes. You can acquire property till 30th June because it specifically cover for any payment for purchase or construction. So definitely you can claim deduction under section 54 provided you purchase an asset before 30th June. The relief given yesterday relating to quick payment of refund is thereby anything we need to do like follow up with this? I don't think so. I don't think so because I think they will, since they have already issued that, they will immediately issue this refund of somewhere around 20,000 or 18,000 crore. So I don't think then there will be any follow-up. I think I find little tricky in those cases where there is a refund due for assessment year 18-19. By virtue of 143(1), there is already a refund. But since your case has been selected for scrutiny, they have withheld your refund. I see a difficulty particularly on those cases where the refund will have been stuck by Joint Commissioner or a Principal CIT. We have a judgment of Delhi High Court and other high courts, including the Gujarat High Court, whereby they have came out and said that once the return has been processed, the refund is due as per 143(1). Merely for the reason that the scrutiny notice has been issued, the refund has been withheld is not a valid ground. I think you can file an application. We have already filed this application in one of our case to, because the refund was needed by that particular SSC, and otherwise it's legal ground also because they cannot simply withhold. So I see a particular difficulty with respect to those cases, but in case where there is a refund due for any other reason, they will be immediately issued. I think we do not need to require any follow-up with the department. I don't think so. Is any other question? I think the question 6 is there.
Mishraji, any further question, Mishraji?
Just a second.
Ah.
Oh, the yes, last question, I guess. If I donate 10,000 to PR Camp Food Day, can I avail? Yes, definitely you can claim. Definitely claim. Definitely. Whether a company availing concessional right takes and making payment for CRSR in 2021 can claim. No, sir. Just let me correct myself. Whether a company availing concessional tax, okay, and making CSR in 2020. Yeah, definitely, sir. Definitely, absolutely, you can claim, because that concessional tax regime under 115 BAA and BAB is has been amended by this Finance Act 2020, and that section, that amendment is operative from the first day of April 21. So assessment year 2021, that is applicable. So for 1920 financial year, any payment made from 1st April to 30th June in this fund or a donation to a PM Care Fund or any other fund, you can definitely claim ATG in last assessment, the last financial, definitely, without any issue.
The last.
Still there is a question?
सर नहीं है हो गया.
So in case you still have any query, probably you can definitely mail me. I will share my mail ID. This is where you can see, this is my mail ID, and I have also shared my number. So in case you still want a better clarity on this or to know further, you can definitely mail me, and I will be more than happy to answer all your questions.
You will have to share your
Virat sir.
screen.
Virat sir, एक question और है.
Acha. Can you just display that?
It's on the screen.
Okay, got it. If the amount is deposited in capital gain account scheme for claiming 54 and the purchase of property is due by 15th April, I think the same shall not be extended to 30th June, because the language suggests that for claiming the deduction. Okay, so let me answer in a different way. Now, the capital gain account scheme, how it operates, it provides a breather to the assessing. So what the department presumes, so long as you have deposited the amount in a capital gain account, and that capital account is an assurance by the taxpayer that he will utilize this fund only for the purchase of asset. Now, if you also read the provision of each section, whether it is 54 or 54F, and when you open a capital gain account, unless and until you eventually purchase an asset, that amount will not actually qualify for deduction. So you are carrying a risk of adding that amount. So take a situation that you do not purchase that asset. Even though you are utilized, that fund cannot be utilized without the approval of AO with the declaration also. And you eventually decide that I am not utilizing. So that amount becomes taxable as a capital gain in the year of fund utilization. So what I'm trying to convey is that since the ultimate aim or the ultimate objective is to make an investment or a purchase or a construction of a house, and that is the time limit which I have to see, and therefore since that time limit is extended to a 30th June, merely because you have parked the fund in a capital gain account scheme, it cannot be said that you are deprived. So I honestly and rationally believe that the deduct in those cases shall definitely be extended to 30th June. I hope my point is clear. Those to who has written this query, I think it's a good. I think I understand that he might be facing this particular query, I think in his own case or probably for some of his client. So I think you read the 3.1 in the context of claiming deduction. So long the 50 capital gain account, opening of an account or depositing the amount in a capital gain account is only a first step. The second step, which is very necessary and which is very condition precedent for claiming 54, is that a utilization. So that utilization time limit has been extended. So you can use that fund which is lying in that account till 30th June and claim the deduction. So I hope that that answers your query.
नहीं है, खत्म हो गया.
Sure. So thank you very much for an excellent presentation and also for covering and answering all the queries raised by the participants. I take this opportunity to thank all the participants also for taking advantage of this webinar series. And every day we have been having huge number of people coming and joining and getting themselves technically updated. I also recognize the presence of CA Vishal Doshi, Vice Chairman WIRC on this webinar. And now I request CA Manish Gadia, Regional Council Member, to present a formal vote of thanks. Manish, over to you. Okay, so I think he could not join in. So let me thank the speaker for today's session. Let me thank all the participants. And I would also want to recognize, thank you to Vishal Bhai for getting the speaker today. And also let me thank the WRC staff, all of them for putting in their efforts to make this series a success.
Sorry to interrupt. I also just wish to show my sense of full support of Vishal sir. Probably we were discussing. I think it was his suggestion in our department, in our office, among our group to take a lead, and I think I just feel very happy and feel lucky to be in touch at the right time. I think he has rightly said that yes, definitely we can have. And at this stage, I'm also must compliment my team who was working on that for preparing this presentation. I think this issue we have already identified. Just on a lighter note, I would say on the 24th March evening, late night also. So this presentation or the issues which I have posed were already ready on the 24th March, and I must compliment my team who have worked on that. And I think I'm really thankful for this opportunity. Thank you so much.
So Manish ji is here. May I request Manish ji to carry out a formal vote of thanks. Manish ji, over to you.
Thank you, Murtaja Bhai, for giving this opportunity. The entire world is going through a rough phase of COVID-19, as you all know, and government has announced various benefit in the income tax. First of all, what are the benefit available? Difficult to understand. Impact, implication, what are the issues in that? So Virat Bhai has rightly covered everything in great detail. So I thank Virat Bhai for giving this fantastic lecture and request all the participants to give loud applause at their home. And thanks to Vishal Bhai for getting the fantastic speaker. And thanks Murtaja Bhai once again for holding such a webinar series in so detail and covering each and every topic. Thank you very much.
Thank you, everyone.
Thank you.